Hi, I'm John. Today we're going to talk about the process of selling a business. I'm going to compare it to the process of selling a house because it's another big asset and a lot of people are familiar with the process. However, there's still some significant differences when you're selling a business. The first difference is when selling a house, you advertise it to the world through the internet, through lawn signs, word of mouth. You want the entire world to know that this house is for sale. When you're selling a business, it's done confidentially. You don't want your employees to know because they may choose to control their future and leave. That could have a negative impact on your business. You don't want your clients to know because they may use it as an opportunity to shop around. You don't want your competitors to know because they'll use it as a hammer in the marketplace. And you don't want your vendors to know because they talk to everyone. Another major difference is when you're selling a house, it's this big, beautiful asset that everybody can see and touch. If you were to sell the physical assets of your business, how much would you pay for them? If we were to sell your business, how much would you pay for the business? That difference, that's called goodwill or intangibles, and that's proven with the paperwork. A third difference is when a real estate agent sells a house, they put a lockbox on the door and they may never even talk to that prospective buyer. When you sell a business, we talk to everybody before they even know the name of your business. We find out what type of work experience they have, what type of certifications and licenses that they have. Were they an employee? Were they a manager? Were they the business owner? We learn a lot of information about them. How much money did they have for a down payment? We learn all of this information before they even sign a confidentiality and non-disclosure agreement. Another difference is when you prepare a house for sale, you declutter, you paint, and you improve the landscaping. When you're selling a business, you do all of that and you get your paperwork in order. Your paperwork can consist of your federal tax returns, contracts, insurance policies, financial performance, list of equipment, all sorts of things. We then take that information and we use that to do a confidential business review. Some people call it an offering memorandum. And in this, we look at the background of your business. We talk about your employees. We talk about the type of work you do, the types of clients you have. We talk about opportunities for growth. We do a SWOT analysis, which analyzes your strengths, your weaknesses, your opportunities, and threats. And we put this in a memo called the Confidential Business Review. We give the business owner everything that they want to know about your business in this memo. Let's take a moment and talk about marketing your business. When your business is marketed, it's done in a confidential way. The first thing we do is we reach out to our database of clients and people who've told us that they want to buy the types of businesses that we sell. We also inform our centers of influence. If this doesn't yield results, we then will advertise your business in trade publications and on LinkedIn and send emails. We tend to use videos when we sell a business because we find that people are much more in tune with videos as opposed to emails. And we also do the good old-fashioned cold calling. Now, in our case, a lot of the time it's not cold calling because we've spoken to them in the past. And the people we've spoken to in the past, they know who we are, they take our calls, and they're excited to talk to us because they want to know what's going in the marketplace. Our buyers are typically not looking to buy a business. They react when an opportunity becomes available. We try to get a number of people who are interested in buying your business to be focused on your business at the same time. This gives you leverage when you go to market. Once we have people that are interested in buying a business, we then have them sign a non-disclosure agreement. Once they've signed that, then we present to them the confidential business review. What we have found is they read this confidential business review. At the end, they know it's either a good fit and they want to learn more and we'll schedule a meeting with you, or it's not a good fit and then that saves you time. We have been told by clients and people in the marketplace that we write the best confidential business review in the marketplace, hands down. Next comes the buyer-seller interviews. This is your opportunity to meet the prospective buyer, to interview them as well as them interviewing you. You need to decide during this interview whether you like them, do you trust them with your business, and can you work for them? Because once you sell the business, there will be an employment agreement and you will be working with them. It doesn't matter how much information we give them or what we tell them. They want to hear the information directly from you, the seller. It's you who has the information, it's you with the experience, and it's you that benefits, and they want to hear directly from you. After the first buyer-seller interview, they'll talk to their consultants, advisors, their spouse, their partners, whoever it is. Typically, they'll request another meeting. In this meeting, they may bring back some of the partners or an advisor, and they'll have more questions for you. This is a positive sign because it's demonstrated an additional level of interest. After the interview comes the offer. When you're selling a house, the offer is the price for the house. Everybody knows what that includes. When you're selling a business, it's not that clear. And a lot of offers can include different things or exclude other things. Typically, we'll see some offers include a guarantee of a certain amount of working capital. Working capital is a way of saying that you, the seller, will leave X amount of dollars of cash in the business and will include the accounts receivable. Sometimes cash and accounts receivable are excluded. Sometimes we see that the owner has automobile in their business that's more of a personal nature, and that's excluded from it. So it's important to know what's included in the offer and what's excluded from the offer. When you're selling the business, you, the seller, are a very valuable asset. And they're not simply going to let you go out the door, they're going to require an employment agreement. So you want to know how many hours are they going to require you to work. We suggest that you taper your hours over time, where at one point in time it's 40 hours, 30 hours, 20 hours, 10 hours. We find this works out well for both parties because for you, the seller, it allows you to transition to your next phase of life. For the buyer, it forces them to step up and manage the company. Other factors that come into play are, do you receive benefits? Do you receive bonuses? And what's going to be the title and what are you going to be doing for that new company? All important questions that you want to know up front. The offer, although serious, is non-binding. However, with the offer, they do put a deposit in escrow. After the offer comes the due diligence. This is a fancy way for saying audit. And at this point, they're going to look at your business in a lot more detail. And some of the information that you weren't comfortable with disclosing earlier in the process, such as the names of clients, talking about contracts and details, or even talking to your employees, during this due diligence, this is the time this process happens. The better and the more detailed the offer is, the better it is in writing the purchase and sales agreement. This offer is handed off to the attorneys who then take the offer and do what's known as a purchase and sales agreement. A purchase and sales agreement is a legal binding document and it has a lot more legal ramifications than the offer. This information is then used by the buyer, if they need bank financing, to take to the bank. After the bank approves the financing, you have the closing. After the closing, we suggest that you and the new owners go out and meet face-to-face with all of your A clients. With your B clients, you do joint calls, and with your C clients, you basically email them. When it comes to the employees, our suggestion is that after the closing, the next morning, you, the seller, host a breakfast meeting. You bring all of your employees in, you tell them that you sold the company, and then you introduce the new buyer. The new buyer will come out, reassure all of the employees that they still have a job, and then meet with them one-on-one. That has been a very effective way in helping people learn and move forward with the transition. After the closing, you'll have your employment agreement to fulfill. It generally takes 6 to 9 months to find a buyer for your business. in suburban or urban areas. In rural areas, it takes a lot longer. Statistically, they say it takes 6 to 9 months to sell a dental practice in a suburban urban area. The same practice with the same type of numbers in a rural area takes an average of 3 to 5 years. So your location has a large impact on how quickly things happen. The process of selling a business is time consuming, both in actual calendar days and actual number of hours invested. The key thing that you need to remember is you need to run your business as if you don't intend to sell it. Because if your sales or your profitability declines during the time that you're negotiating the sale of your business, that prospective buyer can use this as an opportunity to renegotiate or to potentially walk away. After the sale, we've had clients spend more time with families, write books, get a hobby, volunteer on training boards. We've had clients teach at the community college. We even had one client that would rent an apartment in a foreign country, live like the locals, at the end of 6 months, return home, only to spend those 6 months to planning his next trip to a different country. There are a lot of things to do after you sell your business. Let's take a moment and talk about the emotions of selling a business. The closest thing I could compare this to is dropping a child off at college. If you think back all those years ago, before the internet, do you remember visiting the college with your son or daughter? Do you remember the process of completing the applications, the shopping for the dorm room, and driving or flying to the college? Taking all that stuff and putting it in the dorm room, and then your child turns to you and says, "Thanks, Mom, thanks, Dad," and expects you to walk out that door. You walked out that door, and there's something emotional gutting at your heart. It was one of the most difficult things you had to do in your life. That drive home was very lonely and quiet. Today, you couldn't imagine not having given your son or daughter that opportunity. Just like you survived that gut-wrenching process of dropping your child off at college, you'll experience the same gut-wrenching process when you sell your business. However, you survived dropping your child off at college, and you will survive the selling of your business.